The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Let's take a look at the markets. Remember, a week from today, we have a holiday. It's Memorial Day. We certainly want to remember that day. Anyway, the first charts that we're going to look at are the usual ones, which are the German DAX. As you can see here, we posted the hourly chart. We also posted the daily chart. We've completed a major Gartley up there at the 78% level in classical ABCD format. And as you look at the hourly chart, it is certainly starting to confirm that. That's something that we were seeing this across broad markets, but one of the things that happened over the weekend, of course, I finished a newsletter and sent it out, and I'm just a tad bearish. In fact, you should hang up and not listen to the show because I'm so bearish it might affect you, and it'll probably go straight up. But it just really looks negative to me. But one of the things that we look at, of course, is what's happening across the Asia and places like that, and those markets just look absolutely horrible, as does our market on a technical basis. But let's take a quick look here at the FTSE. You'll see we're seeing the same type of thing here in the FTSE. You'll be able to see it here. You got this puppy up here, so we'll be able to see it. We made that, you can see the nice little 3 drive. We went into the area there. We came down, rallied up to a 61% retracement. And to me, I think we're getting ready to go down in all of these. Folks, there's a lot of reasons why I'm bearish. You know, if you just look at the charts, that's the main thing. But, you know, here's one that this is really a simple thing. And this is covered by Steve Rhodes. It's covered by Basil Chapman. It's covered by David White. I don't do too much of it. But this is look at the Russell. Remember, the Russell was the leader of the pack. And you can see here, you know, we've had these lower tops in here, but look at this bearish divergence of the relative strength. And look what happened back in June and July. You see that number 3 level where the market went up and made a new high and there was no follow through. That's very bearish. But look at this time. You see, it's the same type of thing. On the swing up, there was and this is even more bearish than the one back in September. So this is not very good price action. That's the main thing. Now, I want to cover something that somebody's asking me about. It is a bear flag, Marshall. You get a gold star on that one. Door number 3. Come down and get your prize. Let me just talk just a little bit. This is the Bradley model. I just want to show you this Bradley model and go a little bit farther with it just because I don't put it out very much. The reason why it's very hard to interpret sometimes, whereas the patterns are much easier. But if you look at this, I'm gonna go out into the future and go back into the past to show you some of the work that we did on it and why we got started doing it. If you noticed from the time in May when the actual market topped in October of last year and May of this year, you see that these markets were actually off by a little bit. Now, all I did, and this is programmed for Ensign for me, all I did was I took the same thing that we just looked at, and all I did is I shifted it by 7 trading days. And I want you to see the relationship that you see now. Look at the high in September, how the market said it was going to go down into December 26th. Look at the high on May 1st, and look at the low we got down here at 714. On June 14th. This is when it shifted. Now, the way the Bradley model started, when I started working with Dr. Miller, going back in 1986, I went down to Sarasota. She had this little book by Donald Bradley. I'd never seen it before. Twentyman was able to program it. We had all the data from Astro computing down in San Diego with Neil Michelson, and we started testing it. We tested 100 years, and it was amazing how well it did. And this does this years in advance, folks. That's the most amazing thing of all. If you don't believe that there's something astro in these things, you just can't see this over and over again to see this. Now, all I did on this one was to shift it by 7 days. And I don't shift it when I make a regular thing. I'm just showing you that's what I'm looking at. I believe that sometime before the old man in the sky pulls me away, there's going to be a 5 or 10 minute segment on astroastrology, on financial astrology on CNBC or Bloomberg, or they'll have one of those erudite boys from MIT or Indiana State University, someplace like that, and they will give you an idea that some of these things really do work. Dr. Andrew Lowe at MIT covered, the astrology stuff quite a bit in his book, The Evolution of a Technical Analysis. He said that the first technicians were astrologers, and there's a lot of stuff to be said. I have not even come close to finding the Holy Grail. I don't even care about the Holy Grail, folks. I'm a pattern swing trader. I get banged around and I stand up and I get banged around again and I stand up and I get banged around again. I'm still standing. And it's been fun, and I love it. But, I have lots of losses along the road. But I have some profits, too. But, you got to kiss a few frogs while you're in the swamp before you try to get to that little princess. So what we're looking at here in the stock market, from my perspective, is something that is incredibly bearish. I think there's going to be some type of a negative surprise that's going to come in. And now, this is just my feeling. I'm just looking at the charts, saying that the negative preponderance of the market now is headed down. I don't know anything about the sell in May or go away. I'm just looking at all of those indicators that I covered in the newsletter. They're right there. And, some of them are just absolutely screaming to, get out of the market. And what I'm talking about there is what you see on the Asian charts. And that's your homework for today, folks. Go take a look at the EEM. And go take a look at the Hang Seng, and go take a look at the Shanghai Index. These are not pretty sights on the chart format, folks. They just don't look very good at all. So that's what we're watching here. Whether it's going to happen long term, I don't know if this is the major top of tops. I don't think that it is, because of the way we came off of the December 26th low. The December 26th, if we go below that, we got big problems, but I don't think we're going to go below that right away. If we do, then we will have big problems, but I don't know if we're going to do that or not. All I'm looking at, it was just a really good spot, to look at that market this past week as it made a high. Now, last night, of course, when I sent out the notice that I was extremely bearish, I got a lot of flack. Well, not 3 or 4 people, but anyway, let's just see what happened last night in the S&P. You notice that it rallied right up to the 61% retracement at 28.75 and immediately dropped 40 handles. So this is a very bearish chart, folks. The 1.27 expansion on this is below 2800, and if we go below 2815, well, actually below 2825, it'll probably tell you that you're going to go a lot lower. But this just looks very bearish when you look at all the divergences and all the things that are there. And not only that, but we had Tim Bost on last week. We had Norm on Thursday. On Friday, we had Norm Winsky. Both of those financial astrologers were saying there was something really big coming, and maybe that was it on Sunday night. I don't know.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back, folks, and we posted a chart for October sugar. I like to look at October. That way I don't have to mess around with the July contract. It does look like it's making some type of a bottom. There's a 3-drive pattern that happened on Friday. As long as we don't gap down today, I would think that pattern is pretty valid. But anything below, much lower than the low we had on Friday would be a little bit suspect. Now, the next one that Ruby wanted to talk about is the old cup of joe, and that is coffee. And if we take a look at that, you're going to be seeing a market that is setting right at the 1.211. Let's try it again. The 1.27 level at 87 bucks. It hit it twice. We have 3 higher bottoms now. That could be very important if we can stay above 88. I don't know where we're trading this morning, but it looks like it has a possibility here of some type of a bottom. I don't know whether it's going to go from here. We've had several folks asking about the grains. We're in a weather market, folks. We've got a lot of wet weather across Indiana, Illinois, and Iowa. I called the old, that means it's holding up, Ruby. It is above 90/20, so it does look okay. But I spoke with Doug Schaefer, who owns about 1,100 acres down there in Vincennes, Indiana, just south of Terre Haute, and a lot of it is still very, very wet. He's not going to get his corn in probably until maybe the first week in June, because things are not drying out. It just keeps raining, and a little bit here, a little bit there. We got corn now trading about 404 in Christmas corn. That's 40 cents higher than we were a week or so ago, folks. And we were very oversold into that market, and we've had a strong rally in wheat. Wheat's up about 9 cents today. Beans are up. So there's a weather market going on. Whether it's not related to El Nino. El Nino is not this type of a situation. So it might come later, and it usually does. They come on the back of each other. So we feel that if you try to buy the corn on a 38% pullback, that's probably the right thing to do. So that's what I'm looking at as far as I can see. With the grains, they look very, very strong. We mentioned that any pullback that you get would be, probably a very good buying opportunity, and that's so far hasn't been any. But when we do get one, we'll have to take a look at it. I'm not really looking at the Kansas City wheat, Ruby. I just got too much on my plate. And it's almost like Thanksgiving here, with the stocks and bonds and gold and silver and everything else. I just don't have time to look at the KC wheat. The regular wheat, I do look at the July wheat. It still looks good. We made a nice bottom down there. In fact, it was making higher bottoms when corn and beans were making a new bottom. So it's still acting, relatively well. We can take a quick look here at the July wheat, and you'll be able to see here that it really does look pretty good. You'll notice that, let's get this up here. We made that 3 drive to a bottom. That looks very similar to the sugar bottom that we just posted for Ruby. That those 2 little triangles there that ended on the 13th of May. That's a little 3 drive pattern, ABCD format, of course. We had a big move up. We're trading up in that 480 range now, folks, in this thing. It hasn't backed off yet. We're waiting to see what the retracement is before we take a look at it. I do know that the weather doesn't look very good for the next few days, but the weather can change quite a bit, and this market is extremely oversold in addition to the other things that are going on with it. So that's a main thing to pay very, very close attention to. That's a key thing, I believe, to look at. Another one, since we're talking about the weather and you want to get involved and don't have to risk very much, take a look at here at cotton. Look at cotton. We've got a 3 drive to a bottom pattern with a double 1.618. Gee, this is going to be low risk a buy in the cotton because it's going to be affected by the weather also. So this can be interesting. 65-cent cotton. Remember, back in May we were trading at 96. We got a 40% haircut on the cotton. So this is one that looks very, very interesting. Also, the one thing that we need to be worried about, of course, is the fact that maybe we're looking at something that is deflationary. I mean, that's what's causing all these things to sell off. I don't know the answer to that because I don't look at the fundamentals at all. All I'm looking at is I'm basically looking at what the market's trying to tell me by looking at the bar charts and the triangles and the patterns and support and resistance. That's really what I'm watching. And when I looked at it over the weekend, and I looked very, very hard on this market because we had a little bit of a rally on Friday and closed poorly. And when I went to look at it, I said, "Oh my goodness, this is really terrible." I looked at the Dow Jones, I looked at the New York Stock Exchange Index. Let me just show you the New York Stock Exchange Index. You want to see a market that's has flying Walinda written all over it. Is if you look at this. I'll cover that stocks down, commodities up in just a second, Marshall, but look at the New York Stock Exchange Index, folks. We came down, we had a 4-day rally that barely made the 50% retracement level. That's what we made in the Dow Jones, 50%. We made the 61% retracement in the NASDAQ, and that's to the tick, by the way, and also 61% retracement on the S&P 500, to the tick, by the way. So both of them were absolutely spot on. Now, if you remember, last week I mentioned, I believe it was, I mentioned on the program, I'm going to bring it up because I thought it was important enough to bring up Dennis Gartman, who's one of the premier letter writers in the whole business. He's very, very famous, and he does great work. And he's, his is probably the most expensive of any of the newsletters that are out there. And he's showing you a chart going back, 50 years. And it shows you that when you have high prices for commodities, there seems to be a reverse in stock. So look at the Gulf crisis when commodities, we had oil went from $43 a barrel down to that dot-com bubble at $11 a barrel. Then it went up to, you'll notice up there when we had the the housing crisis, and oil got to 130, and now we got oil down around 60. So, but we got other things. Look at our commodities for the grains and oil seeds, very, very low, and sugar, cocoa, coffee, all of those very, very low. Iron ore is doing pretty good, but the rest of them are not doing very well. But when he puts a chart out here that says this might be the most important chart of the year, perhaps of the decade, you ought to pay attention to it, because Dennis, he and I have been around a long time. I met him back in Chicago 35 years ago. He was famous then, and he's even more famous now. But when this ratio usually turns higher, it will do so for years and years, he says, and commodities are exceedingly cheap right now, so keep an eye on that. We are watching that. That's one of the things that we do with the commodity letter, is to keep an eye on the cocoa, coffee, sugar. Don't trade them too much, but when I see the patterns, I try to post them, like the cotton chart. It might not work from here, but at 65-cent cotton, folks, it doesn't tell the farmer to plant much cotton at that price. So all it takes is a little bit of a change in weather, and you could easily see these markets have a pretty big move. So that's the main thing that we're facing here this morning. So we're looking for a lower market this week. How much lower, I don't know. All I know is that it doesn't look nearly as bullish as you might think.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. The Art of Timing the Trade charts has a special running for 1 week only. From now through Memorial Day, you can save 25% off your first month, and we'll ship you a hardcover copy of Tom O'Brien's best-selling book, The Art of Timing the Trade. The Art of Timing the Trade, your ultimate trading mastery system. This software package is the fastest, easiest, and most accurate way to analyze stocks using Tom O'Brien's trading philosophy. It automatically provides you with Gartley and butterfly patterns, swing points, retracement levels, confluence areas, expansion targets, and the power law vector indicator with just the click of a mouse. The scanner searches thousands of stocks each day and delivers a list of every Gartley and butterfly pattern it finds automatically. Just enter the promo code BOOK at checkout. This sale ends Memorial Day, May 27th, so don't let it pass you by. For all the details and to save 25% and get your free book shipped today, check out The Art of Timing the Trade charts on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart for the son of a gun, for the silver, the daily chart. If you'll notice that 78% retracement down there, that number was at 1436. The low last night in silver was 1435 and a half. I don't know if that means much or not, but that was spot on completion. We've been waiting for that for quite some time. The Dow Jones, the gold is held up above the 78% level, right at that level of 1274. The low was, I think, 1273 or something like that last night. But I will show you one chart here that just, this is absolutely a scary chart. It really is. And I'll tell you why. This is, look at this chart for the GDX, which is the ETF for the XAU, which has been going down. Notice this GDX gold silver ETF has been going higher, bottoming way back in late April, and made a lower low of, look at the three higher bottoms that are there. And when you stop and think of that you're making long-term price patterns in silver, platinum, and gold, and this one is going higher, folks, that takes real money to do this. And I don't know why. I don't know enough about ETFs to, it's far above my pay grade, but when I saw that, I said, gee, there's something wrong between the index for the gold-silver index and what's happening with the index itself, because if you look at the index itself, it doesn't show the same thing. You'll be able to see here that it's showing a negative. Look at the three. You got three lower bottoms here in the index, but the ETF that the index is based on has three higher bottoms. Now, I'm going to put that into your homework assignment that someone can show me when that's happened again. I would like to see it, because that to me is telling you something is, somebody's willing to buy that stuff when it's going down. And believe me, folks, the neophyte trader does not buy weakness and stuff like that. That's usually professional stuff. But here again, like I say, I'm wrong a lot, so it does happen that way. But and all it takes is one really super bad day in the gold here and in silver here, and you could look at something really nasty. Because when these patterns fail, and we've seen them fail over and over again, of course, over these past 10 years that I've been here, when they do fail, you've got to be very, very aware that you got to stay away from that freight train coming down the track, because it'll just take you right off to an area where you don't want to be. So just watch it closely. Anything below 1420 in the silver would be a breakout to the downside, and below 1256 in the gold and below $800 in platinum, to me, would say there's something wrong in River City, folks, and we're going to be looking at maybe some deflation for some more time to go. So we'll just watch that day by day, and we'll see what happens. But right now they've held up. Whether they will or not, I really don't know. Now, I did want to bring to your attention one other chart that we don't follow very often, but it is the utility index based on, what's happening with the bonds and stuff like that. Okay, Maria's asking, where do you see the bear case invalidated? It's a lot lower than that. Maria's saying 29.10. Nope, if we get above 29.90, 28.90. 20 cents away from that. If we get above 28.90, taking out those highs of yesterday, something's not right. I made a mistake, and I bring that to your attention because I learned how to eat crow pie long time ago when my grandma said you got to put a lot of garlic in it and you got to beat it to a pulp so that it's easy to chew. So I've eaten a lot of crow in my time, so above 28.85, I would say goodbye mañana. That's about my break-even point in it, so we'll have to wait and see. Anyway, if you look at the, I think I just posted, no, I haven't yet. Let's post the utility. I want to show you this utility chart because this is a long-term weekly, and you'll notice the 1, 2, 3 drive pattern that we're having here. This is related to interest rates, of course, and I believe this is something because, we got bonds already turning down. this will be the last leg to fall of the 3 Dow components. The transportations has already turned down. The Dow Jones has already turned down, and I think the utilities will be falling in line very, very closely. But, that's neither here nor there. We'll watch those one at a time. Someone's asked a question about one of our FANG stocks, and we'll get up here and chat about it a little bit here, and that is the Facebook. Hold on, let's get this up here. We'll be able to see it here. Here again, you see a very, very shallow 3-day rally in Facebook, getting up to 192, and went into that gap area, of course, but it still looks quite bearish to us. The important thing about the Facebook chart, folks, is look at the high on May 1st when the rest of the market was topping. The Facebook was making an exact, to the tick, 78% retracement at 198 and change. And we're substantially below that now, and I think we're going to go a whole lot lower. So we'll watch that. The question was this a head and shoulders pattern? Not even close. Because on a head and shoulders pattern, your left shoulder, which is back in January at the level of 195, the prices are right. But the problem is the time. In other words, you go up to the high where we had that island reversal back in July when the market gapped down from 218, down to 180, dropped down 36 points in one day before dropping another 100 points, getting down to 125. But the head and shoulder pattern should have been more lower, and also it would have happened sometime around the time when we had the 78 and 50% retracement there in February that held the market for a couple of weeks. But a head and shoulders pattern's got to be symmetrical, folks, or it's really not a head and shoulder. That's one of the things that Dr. Andrew Lowe covered in his book, The Non-Random Walk Down Wall Street. He compared these patterns. He looked at the time involved with these things. He did a scientific studies. That book is 700 pages of the most complex formulas that you could ever imagine. And it basically said that the market repeats over and over again. It does so with regularity, and it is predictable within limits. And the key words there are within limits. Nothing is 100%, boys and girls. You've got to remember what's going on. We'll see what's happening here as we go through the rest of this tea. And we had one other question about one of these FANG stocks, and that is Netflix. And you'll see the same thing happen with Netflix. You got up here. There we go. Here, you'll see that we made a 50% retracement and we actually closed lower on Friday, which is not a good sign. We saw that in a lot of different things, and that was telling us that we're most probably getting ready to move a little bit lower. Someone's asked a question about the grains. Folks, I told you what I know about the grains. If there's a weather problem somewhere, watch the charts. I think the smart thing to do is to wait for a 382 retracement in wheat and corn, and look for ABC structure on that. That's what Gartley said to do. He spent 2 full pages of that book, actually 2.5 pages, from 221 to 223, describing the Gartley pattern. And I just named it that because the gentleman did some great work on it. If you've got that ABCD, I can look at platinum for you, Mikey. Hold on one second. We get the old platinum up. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, Mike has asked us to take a look at platinum, and thanks, Mike, because I noticed my limit minder just went off about 20 minutes ago. We hit the exact 78% retracement there in platinum. You can see the ABCD pattern right there at 811.5. I believe the low was that 811. That's what it's showing here, and trading 813 last, but it looks like there's a possibility here. Now remember, we are very oversold in platinum. You know, we're down 8 or 9 days in a row, much like we are with silver and also gold. So these markets are a bit oversold, so we need to watch it. These patterns fail sometimes, folks. That's why you got to stand aside, and you know, that's the whole premise of what we do. It's not the amount of money that you make, it's the amount of money that you don't lose, and that's the key thing to watch and see what's happening on. Okay, all right, let's move on to I have to tell you something that really funny happened here. We happened to my little lovely bride and I happened to be at our casino here, and we had one of our poker playing buddies passed away, so they had a little bit of a service there for him, and one of the players is a minister, so he had no relatives or anything. Really nice guy, Denny Doyle, and we had a nice service, and as we were leaving the casino, Sarah said, "Give me $20. I want to play this machine." So she put the $20 in. It was a penny machine, and gee, it just started going bang, 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 just winning. And you know, it just the pennies just keep racking up. So I'm sitting there waiting. So well, heck, I'm going to take a $20 out, and I played the machine right next to her, and mine hit 3 times what hers did. I put $20 in, folks, and I won 75,200 pennies. That's $752, and for a penny machine, that's a lot. Anyway, we were able to do some good. Anyway, let's move on here to a couple things that people are asking about this overall bearishness, folks. It's based on 3 things. One is the astrology part, because of the Bradley thing. thing that I showed you earlier. Number two, it's based on the tremendous divergence that we're seeing between the Dow Jones Industrial Average, the Russell, and the others. It's basically 100 stocks that made this thing run up, and not even 100. It's probably a lot less than that. But that's the main key. And the third thing is all these patterns are just, spot on. I mean, you're looking 3 drive patterns everywhere. We talked about that with the E-mini last week, the 3 drive pattern that was there. The same thing in the NASDAQ, the triple top that's there. And, most people, you don't see these patterns on Bloomberg and CNBC or anything like that. What we do here is a little different. It doesn't always work, but it works some of the time. And, that's what we're trying to see, what we're watching. It's just basically that. Now, we've had a question about the Bitcoin. I wanted to get it up here to take a look at it because it is, they're rocking and rolling over here in the bit, folks. You'll notice we had that big run up to 8,500. We backed off to 6,300, and that was the 382 retracement of the low from December. Almost spot on, and look at it. We've rallied another 1,300 points just straight up. This is a very bullish chart, folks. We clear 8,800. You're going to be looking at 13,000 in Bitcoin. That would be halfway back. That would be, well, no, it'd be a 38% retracement of the move from 19,000 down to 3, and I believe the 382 on that will take us to the right around 12,000. So that's going to be the next target if we clear 8,500. So it's certainly acting very, 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 very bullish. So Marshall wants to sell Bitcoin. Marshall, be my guest. I've not traded it. I don't want to, and I'm not going to. It's just like social media. I'm not doing that either, so I'm just going to move on. Regarding the currencies, folks, the euro is still trying to hold that level of 111. We're trading 111.60 or something right now. It's got to hold that, otherwise that U.S. dollar could literally, have one heck of a move, and that would throw a wrench in a lot of different things as far as trade wars and all that other stuff. And I quit watching the news a long time ago, so I'm not interested in the news. But I do want to share with you one other chart that I think if we get there, it's going to be a really interesting one, and that is the old WTI West Texas Intermediate Crude. If you'll take a look at it here, I know you didn't, Marshall. I'm just teasing you a bit. You'll notice here that the ABCD structure on this comes up to about the 64. 64.10, folks, is the 61% retracement of the high we made back at 66.60. So watch that very, very closely because crude oil is extremely overbought. We might get a little bit more overbought up around that 64.20 level. And that's where I would be watching that crude oil from that spot because it's got a pretty good chance here to make it. So we'll see. Okay, see if there's any other questions. Someone asked me about how much are you usually right? Usually around 60%. I usually write on about 60% of the trades that I win, and my win to loss ratio is about 1.8. Those, they don't change very much, but folks, I'm only looking at a couple of trades a day. Those I don't like watching the monitor. The monitor is not your friend. So I look at just several things. Like my list today was long silver, long gold, short natural gas, short stocks. I mean, that was a gift last night as far as I was concerned at the 2875 level in the S&P, and we're looking for much lower prices than that. And maybe this all change later in the morning, but right now we'll just see what's happening, and we'll just go from that level. But the technical picture on the daily basis on all of these stock indices do not look good. Now remember, I am a technician. I don't know the fundamentals. I don't know tweets from sweet. So things can change quickly, and if they do, that's why they have stops. Protect yourselves, because if you don't do as a stop, you're telling Mr. Market that I know more than you do, and Mr. Market will turn around with his good friend, the guy who's carrying that big sickle with the big overhead, what do they call that thing, a sash or whatever it is. He'll be swishing down the wheat, and he'll take you down with him, because that's what it's all about. If you don't use a stop, you're telling you the market is not going to be good. That's basically, what we're watching. So keep an eye on that. It's very, very important. And all of these things, you're right. The S&P has held that 2834 level. That's a very important level. So watch it very, very closely. It's really important. That's basically the bottom line of what we're watching here on some of these things. So keep an eye on it. Very, very important. We could make a reversal here, like we've done many times in the past, and see the market go a great deal higher. And that's why you've got to prepare yourself, for switches, or when markets change on you. To me, if we get above 2860, I would say yes, that's probably a change, and you'd probably have to stay. Well, maybe we'll move on to the next one, but we'll see what's happening. Well, we got the old clock on the wall says we're coming up to the last part of our commercial section, and then we will wind up the show in a little bit. I'm hoping to have Stan Harley on this week, and also Shane Smolian. I've got them lined up, so we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks, and I've been asked to take a look at the E-mini S&P on a 4-hour chart. As you can see, on Friday, we rallied up to that 61% retracement, 28.94. We backed off a little bit, had that little bit of a rally up to 28.85. We came down last night all the way down to the 78% level, down at that 28.34. That's very important. That completes an ABCD Gartley pattern there. So going below 28.30 would set up the possibility you could look at another another 100 handles lower down at that 27.36, 27.40 that they're talking about in the Tiger Den. So that's the possibility here. Any move above that 28.80 level would certainly say this is all bogus, and I need to get back to watching the 200-day moving average cross the 400-day moving average, which I always keep that in my back pocket as opposed to flipping burgers at Mickey D's. Anyway, this is what it looks like. It is bearish. Actually, the Russell is and the IWM is much, much more bearish than this one. NASDAQ is very similar to the S&P. The Dow Jones is even more bearish because it was only able to make a 50% retracement. So whether this happens or not, I really don't know. All I know is it started in the right direction, and that's about all you can ask for. You know, like my grandma said, you got to kiss a few frogs when you get into the pond before you find the princess. So that's what you have to do. Keep your losses small and let your profits run. Easy thing to say, hard thing to do. You only learn to do that by baby steps, folks. Baby steps. Do a little bit. Walk away from the computer for half an hour instead of staring at the doggone machine. It's no good. Then start out with 10 minutes, then go to 15 minutes. Pretty soon you'll be up to half an hour. When you go to an hour, you won't even want to watch the machine. I can promise you that. I know you think that's hard to believe, but if you can train yourself to do that, you plan your trades, stick to your plan, and let the boys play. Hey, they don't know what you're doing, and you know what, folks? They don't care. May God bless. Live every day in an attitude of gratitude.